Retail trading is dead and you're only going to lose money trading retail. I'm sorry to tell you, but it's true. Alright, just chill. I can already see you typing away there in the comments. Don't cancel me just yet. You're gonna want to hear what I have to say today, so stay tuned. The truth of it all is we are all retail traders. And no matter what concept we use, whether it be smart money concepts or institutional or whatever it is that we want to call it, however we brand it, one way or another, we are retail traders. The reason the term retail trader exists is because so many people have now come up with this whole thing that smart money concepts or institutional trading is trading with the banks, which might be true because the only way to make money in the market is to follow what the banks are doing and to not get caught up in one bank fighting versus another one. As long as you keep your strategy consistent and your risk management consistent, it can be a very rewarding way to trade. It's also very important to note that you have a more set strategy in the way that you end up trading with smart money concepts, in the fact that you have more confirmations that you can go through. However, it doesn't necessarily mean you can't have many in retail trading. It's just a lot more clear in my eyes to trade smart money concepts. Now on the flip side, with retail trading, you have a slightly bigger stop loss, so psychologically sometimes that's easier to see, but you don't have very big RR trades. So if you lose 1% and you only take 2 RR trades, right? Yes, you can make it back in one trade, but if you take a losing streak of 2, 3 or 4 trades, now it ends up adding up the amount of trades you need to take to make that money back, right? The other thing with retail trading is it was developed for stocks, not necessarily forex. So it works a lot better on stocks than it does on forex. Again, that's subjective. That's from my experience of watching it. But it's not to say it can't work in forex. Again, it comes down to the confirmations you use and the strategy and how you go about trading it. And again, the biggest factor of all, risk management. Now, it may seem there's slightly more negative on the retail trading side. However, it can still be a very rewarding way to trade. It all just comes down to the very simple fact that you need a good strategy and you need to manage your risk well. Now, for some reason, there's a lot of rivalry around both topics because both of them can work. One way or another, you can have a consistent strategy with both of them. And you need to remain consistent with whatever you're doing. So if you're going to trade smart money concepts, keep to that. Yes, you may have 1 or 2 retail concepts that work with it. Go right ahead. No one is telling you any different. I still use retail concepts in my trading. I have people every now and again on my YouTube channel telling me, oh, but that's not smart money concepts. I use them a certain way. Other people will use them a certain way. There's no rule book on exactly how you need to trade. You need to understand a whole bunch of traders who write books, a whole bunch of traders who make videos on the internet, just like I do. We go into trading not really knowing what's happening, and what we do is create a strategy with a whole bunch of different concepts. And that's exactly what you need to do, is you need to pull the concepts that work for you and use those. The things that don't work for you, just discard of them. It's as simple as that. That's why you see, I never teach anything like Wyckoff on my channel because I don't understand it. And if I don't understand it, I can't use it. There's going to be a lot of different people on the internet telling you to do one thing over another, or that one thing is a scam and one thing isn't, when that's just entirely not true. It's very easy for me to tell you one thing is a scam versus another, especially when I'm trying to sell you something. And that's what a lot of people on the internet do. Because they're trying to sell you something, they're going to tell you that the rival competitor is not working. It's a scam. What I suggest is keeping the noise out. Don't let people tell you that the banks are after you. Don't let people tell you that market makers are after you. Because that's just not true. You just get caught up in what they are doing, right? One bank is going to compete against another bank. One institution against another institution. Simple as that. They're not going to be coming for you. You don't have enough money to compete with them. So keep calm. Make sure that you stick to what you know. Don't become liquidity, meaning don't put your stop losses in place where there is a lot of liquidity in the market. Make sure you have your strategy, make sure you execute that strategy, and keep your risk management consistent. Overall, the biggest difference between the two trading strategies is created by gurus online trying to sell you something. And it's as simple as that. So again, don't get caught up in the noise. Do what you need to do what works for you, and I promise you, you can become successful. As long as you stay consistent and keep working at it, it will happen. But otherwise, guys, thanks for watching. I appreciate you guys watching this new video of mine. I'm going to be coming out with a lot more content like this. I'll also be showcasing a bit of my car. I'm going to be traveling quite a bit throughout this year, so I'll bring you guys along there and continue teaching. But until next time, peace.